Let's talk first about what we were just talking about, trade.
Sure.
How much is that really going to affect the markets over the longer term, as far as you can tell?
It's not going to affect the markets that much unless there's many more protectionist actions and retaliations around the world. And we don't think that's likely the case. Trade policy has always been in flux. This administration's using trade policy a little bit. One of the things I learned a long time ago is that any tariff on one particular product category or against one nation, I know right now this is against many nations, but it doesn't stop trade in general. Trade is still going to grow, but we're always keeping an eye on things that affect trade because we believe trade is one of the most important drivers of productivity and prosperity.
So what would go to the essence of that trade? If this is around the periphery, more or less, what would go to the essence of it? For example, the Section 301 proceeding against intellectual property in China.
Okay, so those are some of the issues that are actually important. I mean, there's a lot of trade agreements that are old. The U.S. does have amongst the most liberal import policies, and the U.S. has a lot of intellectual property that it wants to protect. So it's not surprising that this administration and also many executives are raising these issues, that they want to look at these agreements and revisit them. Now, no one's saying let's get protectionist and shut down our borders and not take advantage of each other's expertise and best abilities to do things better than the others, comparative advantages. But the point is, let's not get panicked at this stage that, and the way I see it is that there's NAFTA negotiations going on. Canada is probably going to be, and so probably so Mexico, get exempt from these steel tariffs. That's my view.
But nonetheless, David, when you talk to individuals about what they want to do in the stock market, it inevitably goes down to fundamentals. And they say earnings are good, therefore you want to buy equities. If we do start to see tariffs that then escalate in some capacity, that's going to wind up hurting margins. That winds up hurting large caps, which is exposure overseas. That's a small cap positive story. And that could change their earnings power and revenue power. So how do you factor that in? That's a material fundamental change. Not that we're ignoring it, but there's a very, very long path before we get to the point where margins are under pressure and corporate profits are dropping. I mean, that's true not just for trade issues, it's true for employment costs. Look, we still see very strong earnings growth. I'm estimating 17% earnings growth out of the S&P in 2018. And then the question often is, what's going to be the appropriate PE multiple? And that's why, as you said, investors are mostly focused on the fundamentals of earnings and then interest rates, because interest rates will affect the PE.